Hey everybody, how is it going? I'm excited to be on another video with you here, teaching you guys how to trade. I hope the videos I'm coming out with are just giving you guys a sense of feeling more confident when you're trading. That's really what all this is about. So in today's video, I'm going to be going over the indicator called RSI, which stands for Relative Strength Index. This was actually created by a gentleman named J. Wellis Wilder Jr. Kind of a mouthful. Hopefully he didn't get bullied in school or anything like that. But it's kind of a mouthful to say, but he is an incredible coder, I guess you could say, an inventor kind of sorts. He actually released this indicator in 1978 in one of his books called New Concepts in Technical Trading Systems. He's actually created a few other indicators I'll go over in some other videos, but for this video, we're going to talk about the RSI. So the RSI is comprised of three elements that I really want to point out. We have this purple line here, and I'm going to come over here and open up the settings so you can see what I'm talking about. Under inputs, you can change the setting there. Right now, the length is set to 14, but I'm going to look under style here, and that's just going to be the RSI. So the RSI is labeled in purple. We have a line up here which is pointed out at a 70 mark, which anytime the RSI is above this, this means the price is overbought. When the RSI is below this 30 mark, this means it is oversold. Okay, a lot of ways that traders will use this is if they see the RSI approaching 70, or if it goes above 70, they are looking for short positions. Or in other words, they're looking for the price to possibly, correlation here, to head down, to possibly up here, to head back down. When the price is moving down and the oscillator is at the bottom, which is around the 30 mark or below, this is a place where a lot of traders look to go long, or in other words, buy. And you can see that, for example, right around here, when we see that the oscillator, the RSI, I'm going to use oscillator and RSI interchangeable here. When the oscillator comes to 30 or below, that is when we see that this is possible good opportunities to buy. Now, that is a very straightforward way that a lot of people use the RSI, but I want to show you my favorite way, which is actually using the divergence of the RSI to trade the chart and look for trend reversals. So check this out. I'm going to be using the rate tool over here again, and as I always do, I'm going to simply come down and look for a low within the RSI, and I'm going to start moving my rate tool up until I see another low. It is very slight, but this is actually moving up ever so slightly in an upward direction. But what is even more obvious than that is if we come up here and we look at the low right where this was formed, and we take the low point over here, this is heading down drastically. Again, I like to use a little snowboard and skateboard analogy. If you're on a snowboard or skateboard and you're on this, you're gonna start flying downhill. Pump the brakes a little bit. It might hurt if you crash. Right here, you're on straight ground level. You're not moving anywhere. But this is going to tell us a little bit about the price and where it might be heading in the future. The indicator, the RSI in this particular example, is going to be telling me where the pressure of the market is wanting to be pushing. So this tells me that it's about flat here, or maybe moving up a little bit, but the price is screaming down. This is an area where I would expect the price to head back up because there is what's called divergence. Now let me show you a different form. So if you come over here to the left, take the rate tool again, and let's pull this right here. We're gonna pull this top, and I'm gonna come up, and I'm just gonna keep going down until I hit another top right there. So I'm taking this top, and I'm taking this top right here. Now come up to the top of the price action, and let's pull the same points right here, right about there, and then I'm actually gonna pull the top right up here, around correlating to this point up there, to this point right here. What do you see happening on the chart? The RSI is moving downward, but the price is moving upward. Now remember what I said? The RSI, in my opinion, is telling me where the pressure of the market wants to go. So if I see this on the chart, this is what's called divergence. So around this area, if I were to see this present itself, where the price is looking somewhat like this, and then I also see on the RSI that I've got this going on right there, then I would expect to possibly see a move down in the market where this is a place where you could be putting on short trades. Betting on the market going down is what a short trade is. So I hope you guys enjoyed this video. I know it's quick and simple, but this is enough to get you guys started. Go out there, pick a crypto, stock, Forex, open your chart, use a paper trading account on TradingView to start before you go live. It's always suggested. Test this out. See if you can find divergence and see if you can actually find these moves down or up before they happen. That's going to get you excited and get you more confident about trading. Have a good one, and I'll see you guys in the next video. Bye-bye.